Good afternoon from Forex Hippie. So in this video today, we're going to talk more about how we made 900 points profit from 25 minutes work on our Aussie New Zealand trade last month. Well, let's go straight and have a look at the charts, and I'll show you where we entered and why we entered the trade. So we work on a daily basis, on daily charts, reviewing them for about 10 minutes every evening. So on the evening of the 23rd of May, we saw this high test. So a high test bar is where the price has gone up and come back down straight away. Now that on its own isn't enough for us to enter the trade. We want the high test bar to be reacting against something. And here we can see we've got the 50 EMA, the red one, and the 20 EMA, and it's rejecting both of those. So we've got a really strong indicator now that we expected the price to go down. But we're still looking for more evidence before we enter the trade. And the next thing we look at is one time frame higher and one time frame lower on the charts. So if we go one time frame higher and look at the weekly chart, you can see the weekly chart is in a downtrend. There's lower highs and lower lows. Always want to be trading with the weekly chart. If you start buying on the daily chart with a weekly chart selling, the two things are going to be fighting against each other. You want everything to be working in your favor. But again, we're still looking for more information. We're plotting the trade on the daily chart. We're looking at the weekly chart to try and give us more evidence of the direction of the trade. Now we're also going to look at a lower time period. So if I show you the 4-hourly chart, again, you can see lower highs and lower lows. It's going down again. And when we're looking at the entry point on the daily chart, we're looking at the point on the 4-hourly chart where it produces a new lower low. So let's go back to that daily chart. So we entered it just below this bar here with our stop loss just above. Very next day got triggered into the trade. The next day after that, though we had another sell bar, it had a bit of a tail on it. You can see the price has gone down and come back up again. So potentially this could indicate that it's about to move upwards. So on the 25th, we moved our stop loss just to the top of this chart. Now, when we did that, some of our members were saying, well, why don't we just take some of this money now? Why don't we close this trade? It might move against us. And they're absolutely right. It may have moved against us. But one of the most important things with trading is that you don't stop your profits and run your losses. You've got to try and stay in the opportunity flow. So what stopping your profits means is exactly what I just said, that as soon as you go into a bit of profit, closing the trade, taking that profit off the table without allowing it to grow more profit for you. Running your losses is the opposite of that, where you'd have trades with no stop loss or with stop losses way up high in a sell trade. So you allow your losses to build up and build up instead of at the start of the trade picking a specific point that means that trade's gone against you and stopping your trade then. What we're looking to do by moving our stop losses correctly is stay in the opportunity flow. So what that means is we're protecting ourselves by moving our stop loss here, but at the same time we're still in the trade, so we can still help it to go further in our favor. And that's what it did. In fact, the next day we had a very similar bar, sell bar again, but with a tail. So we moved our stop loss just above that. Then we had quite a sort of fat doji bar. So a doji bar is where you've got a tail at the top, tail at the bottom, and a fat bit in the middle. Again, it's another indicator that it could start moving up. So we moved our stop loss just above here again. Next day we were lucky. We had a really nice big sell bar, follow another doji bar. So again, stay in the opportunity flow. We moved our stop loss just above here. And 2 days later, it hit our target of 1.0462. That's a 900 points profit, or if you work on percentages, it was 6% of our trading account made on that trade. It took 25 minutes. It took about 10 minutes to identify the trade, check everything was in the right place and place the trade. And then another 15 minutes over the next few days, just monitoring our stop loss or where to go. So very little work involved for a really nice big profit. And the best thing about these sorts of trades is you don't have to be profitable on all of them to make money overall. In fact, you could actually lose 7 in 10 of your trades and still make money. Because we risk 2% of our trading account and any on all trades, but we aim to make at least 6% when the trades work for us. If 3 in 10 trades work, that's 18% profit. If 7 in 10 trades fail, that's only 14% loss. So even on those figures, we'd still be 4% in profit. But as the members would already know, we're making many more than 3 in 10 profitable trades at the moment. So hopefully that explains a bit more detail about exactly why we took the trade and how we managed it. But if you've got any questions for us, as always, just contact us at hippie@forexhippie.com. That's hippie@forexhippie.com. Happy trading.